Hello, everyone. Welcome to Option Smith. This is a pretty important episode because I've got a whole bunch of new data now. I went back and I back tested my strategy with a bunch of different variations because I had done some automated back testing before, but I hadn't gone through and really done a manual back test, which is the most accurate for what I'm doing because I was able to really determine um, the different endpoints of for the day and whether or not they would make certain amounts of profit, and to just also verify that if I were trading, um, each of the trades would turn out the way I was recording. So I gathered a whole bunch of data, a full year's worth of trades, and I found a few interesting things. Some things validated what I have been doing, and I found a few little tidbits that I can use to improve my outcome. So first, I'm going to talk about the four main ways a trade can play out with my broken wing butterfly strategy. So as you know, if you've watched my other videos, I always look at the first 5-minute candle on the SPX, and I mark that with a rectangle so that I can see the range. And then as soon as another 5-minute candle closes above or below that range, that's how I decide to enter a broken wing butterfly. So if it closes below like this, then I'm going to go in and create a bearish broken wing butterfly, which means I'm going to use calls because then the premium works out. So the extrinsic value is there and decaying if the stock goes down. So I use calls for the bearish broken wing butterfly, puts for the bullish. So I'll put these calls on, and then I'll move the call on the right side over one strike. So it creates this kind of risk profile. So that happens, and I then wait and see if I get some distance between where I entered and where the price ends up. Now, the only other thing I will do in this strategy is look to see if we travel far enough away. So usually we would be about 30% away from it before I would look to do another broken wing butterfly. So it would be like the price is at the 30 delta. And so this is an example of where we'd have enough distance away. So we put this bearish broken wing butterfly on, and then I look for a break of structure to the upside. Now I did in all this manual testing, I was testing out different ways to do this where I could enter another broken wing butterfly just when we get a candle that breaks structure, like closes above this lower high right here. I could wait for a pullback. And what I found was that the numbers just played out better for me. If as soon as I see us close above, like right here is a good example, then I would put a bullish broken wing butterfly on, and that would create, I can't, let me see if I can do a good example here. Clear draft trades, all. Okay, so I got the bearish one on there already. So if I'm putting a bullish one on, I used puts like this. And it would end up looking like that. So we'd end up with a Batman. Actually, let me move it over a little bit. So then we end up with a Batman trade, and this is called a Batman trade because these look like the Batman mask. But this is a good situation to be in because then we have a higher profit range in here because we've got the profit range going one way and the profit range from the other one going the other way. And they also lessen the loss on either side. But in this strategy, then, if I end up with a Batman on, then I'm just going to let it play out. So it can either finish in between, like right in here, or it can, even better, end the day in one of these profit tents. So that's one way it can play out. Now, if I never see another break of structure to the upside, or if that doesn't happen until it's very close to where we actually entered, then I will just let the trade play out with the one original broken wing butterfly on it. Here's another example. So in this case, I would have done a similar thing, except that the entry would have been here, the break would have been here, so that would have been too close. So this would have ended up actually just being a regular loss, because I would not have put the broken wing butterfly on to create the Batman, because by the time it broke a structure to the upside, it would be too close to where it would be actually right at where we entered. So that would not work that way. So this would be a regular loss because it would have ended up going past and all the way up. And I know in a previous video I had talked about and shown how sometimes I would add another butterfly just to try to mitigate that loss a little bit and take away from it, which is not a bad strategy. But when I really went through the data, what I found was it actually paid off in the long run to just let it go and let the loss go, because there were enough times where it went the wrong direction and then came back later and actually ended up being a profit. And in those scenarios, that profit, that swing back to profit, actually made up for more than the number of times that we would just reduce the loss a little bit and it would stay a loser. So in short, it was, I mean, it's not too big of a difference, but it is a little bit better looking at the data to just let the losing trade just go and just kind of close it down for the day. And sometimes it comes back as a winner, and that ends up making up for any sort of hedging that I had been trying to do. So that is fine. So this is a good example of that, where we have an opening range where we break to the upside, and then it goes back down into the losing area. And before I would try to hedge a little bit and add some credit, some premium, so that we would take away from that loss. But that just ended up not playing out as well as just leaving it alone in my back testing. So in this case, I would leave it alone, and lo and behold, this would end up being a winner. Whereas if I had put on that hedging premium, I would have actually ended up losing here a little bit. So see if I can find another good example. Yeah, these are all playing out about the same. We'll do one more. So here I'd look at the opening range. We break below. I'm watching this. We get down here and I'm thinking, okay, I could put on a Batman right here. In which case, if I did, and my plan would have called for it, this may have then finished right in the profit. I usually look to see if this is about 5 away, and this would be more. So this would end up being actually what I call a small Batman loss. So it would end up finishing like about here if I had put on the back. So 80, That's about 8 wide before we get into a loss. So if I were to put it on here, it would be 755. Yeah, so this would have been like a Batman loser. So I would have put this on, and we could say, yeah, well, if you hadn't put that second broken wing butterfly on and made it a Batman, this would have been just a regular winner. But now you turned it into a loser. But it is a little bit less of a loser because I do have this bullish broken wing butterfly on that took away some of the loss is taken away actually by the bearish one. So a Batman loser in this plan doesn't lose as much as just a single loser. So it plays out again over the long run better if I just always put on a Batman when this happens, because the wins from that just outnumber the losing amount from it. So so that's the plan, is just to continue that way. And I found when I did my back testing, and this is kind of a key point, I found that with 100 trades, I mean, I back tested a lot more trades than that, but narrowing it down to every 100 trades, if I did this strategy, it came out to be over a $2,000 gain. And that's only assuming that it's always a profit in this runoff area. So when I did the back testing, I actually made an assumption that it would never finish in one of these higher profit tent areas, which means that even without these, if we just lopped all of these off and just had this flat, the back testing shows that this strategy would have been profitable for me over the past year, and when I extrapolated that back farther, even longer than that. So all of this above here is just extra gravy, and it can be a lot of extra gravy. So that makes me feel very confident about the strategy. It has been doing well just with me live trading it, but it's an extra confirmation just to do a very thorough manual back test through a lot of days and a lot of trades, and to see that it plays out, because it's a lot of times the back testing, it's really difficult to get it to play out well. And so it's very, very much a positive thing to see those results. So that's how my strategy is set up right now. And again, this is just what I'm doing, what works for me. I'm not recommending that other people do this. And I can't guarantee that this will work for other people. So please take this as just informative about how I trade and for entertainment purposes. So thank you for watching.